Hi traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for August the 26th to 30th, 2019. And what an interesting week we just had this past week. We'll get into some of the events that transpired and some of the price action that unfolded this past week. But to talk about the next week, first of all, we do have a few macro items to note on your calendar. Number one, the G7 summit starts on the 26th of August, Monday, so be sure to watch out for any market-moving news that could come out of that. And on Thursday, the 29th, we have the GDP number. So a lot of economists and traders, of course, will be looking out for the reaction and, of course, the numbers that come out of that particular report. On the earnings calendar, you do want to make sure you're checking the earnings calendar because there are a lot of companies reporting this week. No really big names, but there are enough names reporting that certainly there could be a lot of earning risks on the table. So make sure you are aware of what you're trading this week. Let's get into the week that was now, and then we can talk about what could transpire the next week and the coming weeks. So first and foremost, let's begin with the VXX. And man, it's been a volatile month, especially compared to previous months. So to talk about the VIX directly, VXX specifically, I mean, we talked about this pattern already and how it's unfolded this past month. Inside bar and down, right? It was down July. In August, it went inside bar and up, creating the inside bar reversal pattern. This high actually already took out that high. If you recall in previous videos, if I draw in the pre-market data, if you look at the VIX futures contract, then you'll actually see that this high has actually managed to close above, or not close, but has managed to actually open up and trade and transact trades above this pivot high, but you don't see them here because there's no pre-market aftermarket data. But for folks who do have their stops up here, if they had their stops in the aftermarket hours or the pre-market hours, they got stopped out. So certainly that pattern it has been completed, so to speak. Now, what do we see happen this past week? And this is the interesting part. This past week looked quite calm until things kind of broke loose on Thursday. If you recall what I talked about in last week's video, I mentioned that the buyers in the short term are in control, and the buyers will remain in control until it gets relinquished by the sellers. So the job this week was to watch and see if and when the buyers lost control. Because what did we know about price action? We knew coming into this week that we had full time frame alignment to the downside on the indices and full time frame alignment to the upside on the VXX. So when I say full time frame alignment, that means, on the big charts, I'm talking the quarterly chart and the monthly chart specifically, they were trading above those levels on the VIX chart. On the indices, they were trading below those levels. On the week, it opened up high and then began to trade lower, right? So it traded lower, and then you had a very choppy week. So let's get into the week that was. So green month right now on VIX, inside bar reversal. Weekly, green week. On the daily, here's the picture. So we gap down. There's your Friday close. It gaps down on Monday, and looks like things are basically continuing on with the gap down and the slow melting of the VIX. Tuesday, you have your inside day. So a lot of people got chopped up in here because the ranges were getting very tight. If you look at these two bars here, these are some of the tightest days that we've had in August, right? If you go all the way back to August here, it's tough to find a smaller range bar than these 2 days. So people were getting chopped up here, and here, because even though you had that gap down on Wednesday, it was really tight. Look, that's a tighter bar, a more narrow bar than that bar, and any bar here in August. I think you have to go back to maybe end of July when volatility was really creeping down before you had that tight of a squeeze in volatility. Then we finally had this day, Thursday, which was notable. So this is something that I'm kicking myself a little bit because I wasn't the most prepared trader on Thursday, if I'm honest, because on Wednesday night we had our monthly meetup. We had a good evening that night. I stayed out a bit late, so I didn't do all my homework. That usually gets me ready for the next trading day. And unfortunately on Thursday, this is when things began to unravel, and I wasn't as prepared with my levels as I had wanted. So unfortunately, I was a little bit slow to transition into a non-long bias, or more of a short bias. And on Friday, I had to do a bit of catch up, as my brain was still a little bit on the long side. So once you allowed price action to show you where it was going, it then became quite obvious, because this was the final line in the sand. I'll back up for a second here, but let's talk about this. So on Thursday, it goes gap down, and things look like they're in the it's in the camp of the bears, the VIX bears at this point, and the index longs, because it goes gap down, right? As soon as it pops back up and it comes back in the range here, there's the potential, right? It's still potential that this thing could come back through the other side, creating an outside bar, thereby also creating a potential inside bar reversal, inside bar going down, and then it reverses back to the upside, creating the inside bar reversal. Here's the interesting thing. So it pulls all the way down. So price pulls all the way down from the high of August 15 here on the VIX, all the way down here to 25.08. Now I've drawn this line well ahead of time. I drew this line way back here at the end of August, or at the end of July. This is when I drew this line. So this line has been in play now since the 1st of August. So basically, 20 plus trading days. What is this line? 25.08. You know what that line is? You can see it right there on the daily chart. But to make it very obvious, on the monthly chart, that line is this chart line right here. That's the high of July. That's what created the inside bar reversal when it broke above it, 25.08. So what did price do? We'll go back on the daily. Price came all the way back from the high here of 31. It came all the way down back to 25.08 to the tick. Look, the low there is 25.08. Buyer stepped in and launched it up to 29. That's the high here, 29.46. So basically, they pushed it up over $4 and close to close to nearly gap filling this area here, 29.67. They gapped it in. They basically pushed it up over $4.50 over the course of 2 trading days. So it was a beautiful retest. If you pull it back here, you see what happened. Here's your end of July. That's your outside bar. August the 1st, outside bar up, momentum move. Up, momentum dies here. Now, it goes all the way back here now and pulls all the way back just to retest the breakout. There's your initial breakout. Now here's something that's interesting, and I'm not a big Fibonacci person, but I do like to sometimes look at it just because I know enough people use Fibonacci where sometimes you have these self-fulfilling prophecies. You draw in the pivot bottom to the pivot high. It pulled back exactly 38.2%. Okay, so there's your 50% pullback there. There's your 38.2% pullback on that 25.08 line. Fibonacci says 25.07. That's 1 penny. Within 1 penny, that's pretty much bang on, right? So a 38.2% retracement. That is as close to technically perfect as you can get there. Their buyers, whoever picked up that area right there, they're laughing because they basically nailed the bottom within 1 penny. So they picked it up. It turned outside day, and here's the day where on Thursday it was still anyone's game. So on Friday it gaps up, and that's when you realize it's now an outside day up, and that's a momentum move. And so at that point you got to change your gears immediately, had you not already. But once you clear this area here, you're also above the weekly open. So now you have full time frame alignment across all the time frames. Okay, so that's monthly, quarterly, weekly. Now you're just long VIX and short indices, because at that point you got full time frame alignment. I thought that VIX was going to be able to close the gap here. That was at 29.67, but it came within about 21 cents of it, so it couldn't quite do it. So I'd be very surprised in the next week or so that we don't close that gap. But the indices, those outstanding gaps that were out there, and we'll show those in a few moments, they all got closed this past week. So VIX couldn't quite do it, but that's the pivot in play. So here was your real clue of the potential catalyst, and this is what here's the catalyst at play here that set up that big movement on Friday. Look at the 4-hour chart, as simple as this. And this is why I'm kicking myself a little bit, because I wasn't as prepared as I'd like to be coming into Friday. So on Thursday, we had that outside day. It was basically this big move here. So here's your 4-hour chart. Gives you 2 bars per day on the equity side. It gapped down, right? People defended the 25.08 level. They popped it up. And then the second half of Thursday, price basically consolidated inside of Thursday's morning session. So there's your consolidation. This once again chops up a bunch of people because you have a wide range on the morning session. In the afternoon, nothing happens, and people tend to either overtrade, or they lever up their trades expecting something to happen. And if they're wrong, they're going to be wrong on larger size than normal. And so on Friday, when it gaps up, and actually, if you recall what actually happened on Friday, it opened up here, but they actually began to sell it off right from the get-go. But once that Trump tweet came out, that changed the whole picture, and price quickly came back up, creating that outside day. And this creates the, outside inside pattern with a retest of this area here, and it takes off. And so that's the move that's built up from the consolidation pattern of this outside inside, and it goes momentum up in the afternoon. So we'll get down to a lower time frame in a few moments. I'll talk about some of the trading opportunities, but for now, let's shift over to the next product, and we'll talk about SPY. SPY, a real mirror index here. So on the SPY here, what do we have now? Here's the issue on the SPY, right? So on the monthly chart, this is what we've been angling for a while, and we're trying to see how it's gonna get there. Outside, and up, and now we've been calling for this low to get taken out, right? So outside bar, we're looking for that pivot low to get taken out. It looked like 2 weeks ago the buyers had taken over some of the control temporarily, but this week finally they relinquished it after, funny enough, it was a Trump tweet that did it. Going into this week, the majority of I think traders and economists were looking at the macro calendar, looking at what the Fed was going to talk about on Wednesday, where they didn't have a meeting, but they had the minutes come out. People were wondering if that was going to kind of crack things, crack the buyers. The Wednesday minutes basically did nothing. So here's Wednesday, right? Look at Wednesday. I'll zoom in here. Wednesday's right here. Wednesday, nothing came out of that. Then on Friday, it looked like it was going to be another day in the markets. Things were kind of moving up early in the morning until, and of course, on Friday we also had at 10 a.m. we had a Powell speech, and everyone was waiting on Powell's speech to see what was going to happen. Powell came out very, very accommodative, and the markets liked what he had to say. It sounded like that he was going to support the markets as necessary. So the markets really like that. But then as soon as that Trump tweet came out, the whole thing changed. I thought we were going to go higher, but as soon as that tweet came out, then it just changed the whole composure of the markets, and everything basically sold off. So just like the VIX, once it went outside bar and down, you took out that bar's low, it was over. That they came ripping right through there and took out that gap, and it finally took out that gap down here, 284.65. We've been talking about how is it going to take out this. You still have this pivot low here to go after, and how it's going to do that, because if you recall from the last 2 weeks, it came really close back on the 15th, but it rallied all the way back up again, but it couldn't quite take out this 294.15 pivot. I was really thinking it was going to go after that pivot, and it came really close on Thursday. It came within 294.15 was the pivot. It came within look at that, 7 cents, 22 cents. So it came very, very close to taking it out, and the buyers, the sellers stepped in and basically overwhelmed the buyers to the downside. So on the same front here, on the weekly chart, we now have a red week. However, it's still inside week. So remarkably, even with all this volatility we had the last 2 days, if you did take out those 2 days, and I'm saying you can't do that. It's not an option when you're trading. You just can't take out days. But here's the interesting thing: going into if you look at the chart this way, going into Thursday, Friday, it was a very, very calm week. It was still a very, very much an inside week. And you were asking, you're looking at the chart saying, how does it get outside of the last week's range? Because it was very, very tight. So going into Thursday volatility bumped up a bit, but it still wasn't exceptional. And then on Friday, of course, it sold off. It was down 2.5% on the SPY, but we still have an inside week, interestingly enough, on the weekly chart. Still inside bar. So next week now, this sets up the possibility for any number of things. So this is the interesting thing about this price action the way it worked out is that we still have an inside week. So even though we have all of this volatility, we're trading inside a range. That's all that means. Inside week means it's range bound trading. So once you understand you're still trading inside week, you can expect tight reversals, and that's exactly what we got here on Thursday. We came so close to taking out that pivot high, it couldn't do that. So if it's going to remain inside week, it's going to look like that. It's going to have to reverse so it doesn't take out that pivot high, and it's going to come all the way down. Now, in order for us to say inside week, it can't take out that pivot low from the prior week, and that's what it did. It stayed inside that range and kept us inside week. Now here was quite interesting because we finally got that gap fill down here, 284.65. It traded slightly below that. Once again, the 200-day held. It bounced back up now. Now, what happens on Monday? So for Monday, we do have the following, right? So on the 4-hour chart, you have a 4-hour chart. You have the outside inside pattern that broke to the downside, just like we saw in the VIX. Weekly now, we want to see which side of this weekly candle does it break out of. Does it go inside bar and down and keep going down, or does it go inside bar and up? So kind of make its way back up again and come out the other side. Or because now you have one final week left in the month, and that was we're trading in a channel with a big and large enough range to make money on both sides. Do we just stay inside week again? So you got to watch out for those three scenarios. On the daily chart, this is what it's telling us. Thursday is outside bar and down. So now we actually have momentum to the downside. So right now the sellers are in control until proven otherwise. We have full time frame alignment to the downside, trading below the weekly, below the monthly, below the quarterly, or that's quarterly, that's monthly, that's quarterly, and now we have full time frame alignment to the downside with a momentum pattern. So as for intraday trading, here's the interesting thing, right? So let's go take a look at the intraday trades for a second, and let's look at the 60-minute chart. So right here in the 60-minute chart, this is what we see here. So actually, I want to drop down even one time frame even lower, the 30-minute chart. So here it goes right here. So here's Friday. Here's the open. Now, if you don't see this here, I'm going to show you something. So if you don't use pre-market data, there's you are missing out on a bit of the story here, right? So without the pre-market data, I'm just gonna show you what the bar looks like first. It looks like it just goes like this. It looks like it just goes green up, doji, green up, maybe a shooting star, right? And that's significant in itself because it does the gap fill. It gets stuck below the weekly open, okay? So they could not crack it above the weekly open, and then it comes back running right back through at 11 o'clock here. Once that low gets taken out, it goes outside. It goes up, and then a huge bar down, and then it breaks down. But look, I'll add to the story a bit here by just turning on the pre-market data. Okay, so there's your pre-market data. So now you have a little more context. So now the 930 bar is actually a outside bar. It was bigger than the prior bars ahead of it, right? So there's your outside bar, the prior bar ahead of it. And so now what you have here is an actual momentum move, because what actually happened at 930 was that the sellers actually tried to sell it off first, but the buyers bought it back right away, forcing those shorts to cover, and they go momentum move, so outside bar up, and now you see that if this low gets taken out, there's a lot more context there, because not only is this meaning the gap fill and it's coming back through and that they cannot break above the weekly open here, but this is a momentum move. So momentum moves, when they fail, you can expect a very, very strong reaction to that. And so that's exactly what happened here. We had an outside bar, an up move that failed, and then that's when the sellers really kind of took over. So on the on the intraday charts, it was a very nice move. You could have traded in many different ways, but if you wanted to take a slower chart, you can use something like this, the 30-minute chart. It flashed you two inside bars here between 1:30 and 2. So if you look at that on the hourly chart, that creates this bar right there. Okay, so there's your hourly inside signal. Now here's the a phenomenal trade. So had you missed all this, had you did not, you couldn't find entries, or you just missed that, it was a really easy trade at 2 o'clock. So here the buyers try to defend, they actually broke them down. At this point here, the sellers are in full control. They're just consolidating here, and here, once this inside bar breaks to the downside, it just cascades it down. So you can either take it on the 30-minute chart or use a more intraday chart like a 5-minute chart to get better price location. So right here, there's your 30-minute low. So that line's already drawn. That line there's already drawn. So if you recall, once again, the line here is 286.02. That's the low of this inside bar. You can just sell that once it gets below there on the 30-minute chart. What I'm telling you here is you can use a lower time frame chart to actually trigger the 30-minute bar. So right here, there's 286.02, and it breaks below that level right there. So that level here, how it gets broken is this sequence here: outside bar and up. That's a momentum move. Once that low gets taken out, right, that's just like we saw on the 30-minute chart. The outside bar moves to the upside. Once that low gets taken out, they're coming back through the range. So this guy stops out these guys, and that breaks the 30-minute low, creating that cascade to the downside, and that breaks it all the way down, right? So he does a little retest here. Here's an inside bar reversal, so another nice reversal move. Inside bar up, there's the same level, 286.02. You reverse it, the seller step back in again, and it breaks all the way down, gap filling that gap at 284.65. Now look at the bottom. Look how it bottoms here. Okay, down here, right at the bottom, the shorts cover before they go into the weekend. Okay, so it goes outside bar and down at 350. As soon as it breaks above 350, above this high, 284.60, that means the sellers, are basically covering, and we get that small pop to the upside to go into the weekend, as no one wants to carry maybe excess amount of shorts going into the weekend. So that's that's the kind of move you can hold right into the close or close to the close until you see them take out a prior outside bars. Once it goes outside bar and down, until it can take out a high, it pops up. So one comment that that I had in the trading room that I find very useful when I hear traders talk about it is that when things begin to sell off, it seems like there's a lot of outside bars. It seems like price gets a little choppier and it's hard to hold on to these trades. And I absolutely agree with that statement and observation, because as the old saying goes, when the price goes up, and the markets go up on the escalator, but on the way down, they take the elevator, right? And so what ends up happening is that as things get dislocated, people get there's this higher degrees of fear and greed going on, and included in that fear and greed is greater amounts of volatility. So the ranges that people are used to operating before things begin to sell off start to change, and you begin to see more outside bars as both sides, both shorts and longs across time frames, are getting triggered into action. And so you do see oftentimes a lot more outside bars. So if you're simply trying to trail bar for bar and not understanding the price action, it's very easy to get chopped out of a move, and then you have to find a way to get back into the move without chasing. That's the key, is that you don't want to be chasing price because you're just going to end up getting stopped out. Right, so if you do something like this and you just buy the breakout low, it works for like a few cents and then it comes right back up again, and no one wants to hold through that stuff, because then ultimately it works for you, but it's just bad timing on the trade. It's better off to look for a reversal than simply chase price downwards. So certainly, if you're struggling with that aspect of trading markets, even if you have the direction right, but you're not, but you're getting chopped up before the move happens, it's an issue of timing and an issue of trade location. So number A, you're either chasing price, or B, you're not looking at a level or an area that where price is going to change materially, right? So that means you're looking at an area that could just basically be dead air or no man's land, and price has to do its work before it's price discovery before it's actually going to go back in its intended direction. Okay. So that's a SPY chart, and man, all the indices pretty much look like that. So that's why I wanted to cover that setup there on the intraday chart. So let's zoom back now on the 2-day. Actually, let's go back to the 60 really quickly, because going into the 60, there's our the last 60 of the day, inside bar and down. This is the after hours, so we can't give it a lot of credence, but definitely want to be watching and see how this thing breaks on Monday. Does it go inside bar and down, pop back up? Or, again, the bigger signal here is, now I'm going to delete some of these lines now because it's less relevant. Let is now, we want to be watching for, is we want to specifically be watching for how this inside week gets resolved, to the upside or to the downside. So that's what we want to see. We want to, watch those levels very, very carefully. I'm just going to draw this line in blue now. So here we go, my colors are up here. Okay, excellent. So once again, ultimately the pivot we're going after in the month, don't lose your bigger focus, is that pivot low down there. June's low. Okay, so that's June's low. This is the pivot that's in play right now. How we get there, it could be choppy, could be not, but that's the pivot that's going after right now, especially with full time frame alignment. Okay, next, talk about Qs. Oh, excuse me. All right, so on to Qs now. So Qs, it's a red month right now. Weekly chart, also an inside week. So even though we had all that volatility and Qs, was down over 3% on Friday, it still remained inside week. So just like we said on the SPY, we're trading inside a channel, a big channel, but it's still a channel nonetheless. Okay, so On the daily chart, just like we saw on the SPY, it's outside day down. So momentum move. In order for momentum to stop, remember, we need to see a prior high get taken out. That will invalidate the momentum move to the downside. Right now, we want to see, once again, how does this inside week break, to the upside or to the downside. Okay, let's talk about Russell. Slight different chart. This has been the weakest chart of all the indices, and one, this is an index that I do not trust, especially when it's leading. So on the way up, this past week, Russell was having bigger green days, but Russell's not a chart that I trust because it's been outperforming all year long. So Russell, what do we see here? I've been calling this pattern out for a while now. If you look at the monthly chart, it's inside bar and up, now reversal to the downside. It took out all those pivots. I've been saying this is the pattern, right? It took all those pivots. That work is done. Here's the bigger issue. That monthly breakdown, if you recall, it triggers the inside bar reversal on the quarterly, which puts Jan's quarterly lows, right? So Q1's lows now in play for the Russell. If we can stay below the 145.32, and we're trading, where are we at? 145.44. It's really close right now. It's getting close to breaking up below there and then putting that low there in risk. And actually, I was wrong. I think I said before that the Russell did not have a inside week, but it actually did have an inside week. I thought it did not have an inside week, but TradingView here on this chart, it is telling me inside week. So I'll trust TradingView here. I'm gonna give the benefit of the doubt. It's outside and down, but look on the weekly. It's momentum move to the downside, right? Outside, down. We have not had a higher high, since this bar got put in back on the 29th of July, that week of the July 29th. So inside week, we want to watch out to see how this week breaks up or breaks down. For now, momentum to the downside on the weekly. Okay, the macro charts, they look really negative to the downside. Not good or bad, but negative meaning we can recoup this range here. So great if you're a bear, not so good if you have a long bias. And the daily, outside bar down, so momentum in the favor of the sellers. And let's look at Dow. Okay, and Dow, here we go. Outside, outside and up, and now coming back through this range. So that's the issue, is that Dow has that pivot low now in play. So that's the pivot that's in play right now. I just wanted to do a quick look here on the Dow. On the quarterly, I think it's probably just going to look red. Yeah, so we had an inside bar up situation, and now it's coming back through the range. So now I'm just going to adjust some things around here. Let's move this pivot right there, because that's the pivot that is going after right now. How does it get there? Does it get there in a nice clean shot or not? Here's the issue with the Dow. This is what makes it very interesting here, because if we look at the Dow now, our inside week creates the outside inside pattern on the weekly chart. So this is certainly going to be potentially very explosive depending how we clear this range. Okay, so that could definitely create for some momentum here, depending on how we create, how we break out of this range. Daily, outside bar and downs. So momentum move to the downside right now. Everything's saying it could be a break to the downside. If it breaks to the downside here, we're going to get that move from there to there. Right, there's your outside bar low on the weekly chart. Puts us right back to June's lows. So very possible there. And at the end of the day, that move there, let's just draw it in here just as a potential move. I just want to measure it here. So if it breaks, let's say from this pivot low and goes down there, it's a 3% move. Is that right? Yeah, so it's going to give us about a 3% move. So, again, the day, it's not a catastrophic breakdown, especially if you look at the bigger picture. Let's take a look at the 12-month chart and look where Dow is right now. Dow is still up 10%. So if it pulls back in, it'll be up 7, around, let's say, call it around, 7%, maybe 6.75%. So that'll still be a decent year, but nowhere, close to where we were just, a few weeks ago. So it still could be a positive year. It's, but the bears are certainly cutting into the profits of the bulls right now. So let's wait and see how that plays out. Okay, but right now, momentum's telling us it's to the downside. Let's look at the Canadian index, TSX. Speed things along a bit as we're getting a little long on the tooth. Here's the Canadian markets. So basically, red month. Very tight trading right now. It's still inside this range, red month. If you look at the quarterly chart, you call it an inside quarter. You can see how tight that is right now. Still in the month left. It's getting close to the bottom there. But if it has some sort of pullback here, right? That's going to remain inside quarter, but keep watching that for that level to get taken out, one of these lows, because that will crack the quarter and make it potentially not only red, but a quarter that broke below the previous quarter's range, and that puts this quarter low at the potentially in play. For now, weekly inside week. So just like the other indices, it's inside week. So very tight stuff on the TSX right now. Outside bar and down. So same daily pattern we've seen across the rest of the indices. Let's talk about emerging markets, because this one here got hammered this past week. So really good story here. As you recall, inside bar reversal on the monthly chart, came right back through, took all those pivots. Red week now. And here's what the emerging markets did in the beginning of the week. And it was quite bullish because we had a number of earnings come out from BABA, WB, IQ. There's a bunch of names that came out this past week, and they reported pretty good earnings for the most part. And this gave a lift to emerging markets. And we had a gap up on Monday, did come back in. Inside bar on Wednesday, it actually gaps up. And here, it actually took out the prior pivot's high. Okay, so this here, that's the pivot that we were looking for. The high there was 40.11. It took it on Wednesday, and they sold it off on Thursday, Friday. When the tariff news came in, that really crushed the EEM, that's the Emerging Markets Index Fund, and managed to gap fill. So the gap was right there, 39. So I'll just move some things around here. The fill was 39 right there, and look, a gap fill basically right to the tick. So the low here is 38.99. So it came down 1 penny below, and they bought it right back. All right. So if we actually let's just zoom in here. I'm going to go to another time frame chart. On the 2-day chart, it goes outside bar and down now, right? So momentum moved to the downside. So again, you need to keep watching to see if the sellers remain in control or not. And if they don't, they lose control once a prior high has been taken out. But if you break down something like the let's just call it the 15-minute chart. Okay, so let's just zoom up here a bit. Yeah, so right there. On the 30, it goes outside. Here, I'll just zoom in over here. Outside bar and down. I'm just going to turn off. Actually, yeah, let's do this. Outside bar, inside bar. It goes inside bar and down. That gap fills, goes 38.99, and they buy it right back, creating the inside bar reversal that pops back up at the last 15 minutes of the day. All right, so if I zoom in on the 5-minute chart, you'll see even further. You see these outside bars? I know it's a little tight there. It goes outside bar, outside bar, outside bar, and then pops back up, cracking this high right there. That means the shorts are covering. You can see the shorts cover on the volume there, and they crack it back up. That doesn't mean things are going to higher. It just means the shorts decided to cover as they went to the weekend. So very, very interesting price action at the end of the day. Let's take a look now at bonds. TLT, man, TLT is on a roll. Okay, so we talked about all-time highs in the picture for TLT, and that's what it did. Hit all-time highs, and it's done nothing but hold those highs, or close those highs now this past week. So this past week it took a bit of a break, went inside week, so nothing's really changed with the technical picture of TLT. So the long bond, green month, right? Outside and up on the month. It means it's momentum to the upside. When I say momo up, it means momentum and up. You need to see a low get taken out here, and there's very little chance this low is going to get taken out this month. Inside week, next week, let's see which way it breaks. Is really, really high right now on the Bollinger Bands. It's doing kind of a Bollinger Band walk, so it just has to keep going, otherwise it's going to pull back in. Doesn't mean the move's over. It just means it's going to need more time to potentially consolidate. But look what it's doing right now. All right, can you see the prior? I'll just zoom out so you can see. Okay, so it broke up above the prior high. That's the prior all-time high. Right now consolidated right there. Right, so that's the open that it broke out of. Came right back in, consolidated. They bought it back again, 143.62, and they defended that level. Okay, so they're holding it there right now, 143.62, which puts it right on here. That's the sequence here, right? Outside bar and down, they defended the weekly open along with that previous breakout level. It goes back up again. As soon as this high gets taken out, they're coming back up to the range. They took out that pivot high. So very nice trading on TLT. Things potentially going higher. If you look at the 4-hour chart now, for our chart, and I'm going to turn off here. So for our chart, let's just do this. I want to turn off the pre-market for a second, just to make it cleaner. Okay, there's the 4-hour chart. At the end of the day, outside, inside. Okay, so momentum to the upside, outside, inside. You want to watch and see on Monday which way it breaks, because if it breaks to the upside, guess what? That's going to trigger the weekly chart. So the weekly chart, see the high right there? These are inside bar. That is top of this outside inside pattern. This thing cracks above here, that will also trigger the inside week to the upside. So watch for that. If it breaks that, it comes, does break out. You want to watch that it doesn't come back in again. If it comes back in, it's going to get choppy. But if it, especially because the weekly open is going to be up here, if it breaks out right away, right? You'd rather see it not break out right if you're a bull. That is, if you'd rather see it pull back a bit, lure some bears in here. It does some sort of reversal and then breaks to the level, and then people have to cover their shorts, and the longs can step on their longs here, and then really cause this thing to drift higher. Okay. So ideally, you get the pullback, but if it's full momentum to the upside, then people are just going to jump into the trade regardless. They won't care about any reversals, especially if people start to panic and the bonds are going to be the place to be, or continue to be the place to be, and people are just going to bid up for price. So at that point, you're just going to follow the trend. Okay, we talked about emerging markets already. Let's talk about GLD this week. And we don't have to talk about XAU because I think the GLD picture is pretty clear. Things are going up. So gold, look at the gold chart. Let's zoom out for a second. 3-month chart, there. Outside and up on the quarterly chart, right? So you can just see the strength there. It's outside bar and up. You still got another month left in the quarter. So this pattern is still playing to the upside here. All-time highs, way up here at 180, 185.85. And with the all the global macro stuff going on right now and the geopolitical risk, gold is certainly a good place to be. Outside bar and up on the quarterly, big green month. It's gonna it's a really good month now for gold, 8% up. Big green week. Look at the weekly chart on gold, right? We've been saying it for weeks now. It's outside weekend up, Momo up. Okay, so you need to see a low get taken out. I want to move this low here. It did not do it this past week, so until a low gets taken out, we're not going to come back in here and correct this price action because the buyers are still in full control, full time from alignment to the upside. This past week, very tight stuff in the beginning of the week, and then of course once you have that geopolitical risk turn on, they stepped into gold heavy and people bid it up to close to 2%. All set up here. This is why I love looking at outside bars, because outside bars basically show you the battlegrounds, and you can see how people react to those battlegrounds. Outside bar and down goes inside. That means the sellers could not push it any further down. And look right there, consolidating right on the purple line. What's that purple line? The weekly open, right? That's the weekly open. And so they defended the weekly open, kept the week green. Once it broke above here on Friday, it was gone for gold. So gold was, had an exceptional day. Things like Nugget, which is the gold miners, and JNUG, the junior gold miners, exceptional returns on Friday. Bitcoin, I want to talk about here, BTC USD, not quite as lustrous as GLD, but holding its gains nonetheless. So Bitcoin having a bit of a red day today. That's a Saturday today. Let's pull up the higher time frame charts. But as you've been talking about the last few, that's been like 2 months now, we're still trading inside month, right? Not only that, this is why I'm saying we've been talking for a few months. It's trading inside. Whoops, that's I always pull up the wrong BTC chart. I want to pull up the one from Bitfinex. We're trading inside quarter, so very tight stuff. Okay, so we're trading inside quarter here now. How do you get outside this inside quarter? Okay, because right now the chart looks like this with 1 week left. I'm not sure Bitcoin's going to be able to clear this prior month within the next week, right? Because you're still trading right inside this range here. So maybe the best case scenario is for buyers, even sellers, is for this month to play out, and then you can get more of an explosive move to the upside or downside and play whichever way it breaks that range. But for now, week was in very tight. Look at the daily price action, just bouncing around those ranges. Now, why is it trading like that? Well, I'm not talking about the fundamental picture here, but one of the pictures here is that you have that blue line, which is your quarterly open. You have that orange line, which is your monthly open, and you have cutting it in half, close to half, is the weekly open. So you have price dancing in between these 3 different time frame opens. Why this is conflicted is because literally it shows time frame conflict. So people who have investments on the quarterly time scale, anytime it trades below this open, they're seeing red on their books, right? If they bought that open or they bought around that area, or they're looking at their quarterly charts, looks like a red chart. The guys on the monthly, for the most part, for them, they look at just the monthly chart, it's been a green month because Bitcoin has not spent much time below the monthly open. And for the folks around the weekly open, it's been a green and red, green and red, green and red week so far. So depending on your time horizon, the charts are very much conflicted. And this means until you have some sort of alignment, you're not going to have multiple participants across those time frames all acting together in unison. And this is what you can expect to happen when you have this type of time frame conflict. It creates something like a inside week. That's what you have here now. So let's see how we break out of that. Now, on the total side, which is the overall crypto market, looks very, very similar. Nothing much to report on this front other than that it looks a lot like we saw last week. So right now, still inside quarter, inside month, inside week. Very, very tight stuff there, although it is trading full time frame alignment to the downside, below the weekly, below the monthly, below the quarterly. So the bears have a slightly better bias right now on their side. Only issues that you're still inside month, inside quarter. So you need to break out those ranges, otherwise it's just range trading. It's very, very tight stuff. Now, one potential symbol that I'm gonna, I stepped in and bought a very, very small feeler right now is Ethereum. I think it's potential there if this thing plays out properly. Now, I'm going to turn off some of these here. Okay, so right now, red month. So that's kind of a red month, red quarter for Ethereum. Not a great, there's a bit of time frame conflict there. But here we go. Outside on the weekly, outside bar and down, inside week. If the buyers can step up here and take out that inside week's high, then that will alleviate the momentum to the downside. So that will basically, reset the momentum to the downside. But then buyers still have to step up. Buyers have to step out and take out that pivot high. And if they can, then they're going to go after that pivot high. If they can take out that pivot high, that will potentially change the month green. Because once you go after that, they're going to go after that pivot high. Then you're going to have a green month. Okay, so that's the cascade that could happen here. And so that's what you want to be watching for, is what would trigger this inside week to break. So you're looking at the 2-day chart or the weekly chart, the daily chart. What would trigger this guy to break? So I bought a small amount here at 195.48. So right now my stop's below there. Not a great trade because it doesn't have full time frame alignment, but willing to take a small risk here because I think the upside's interesting. This is this is definitely trading against all the time frames, so not like a really, really bullish and leverage bet here, but just curious to see what's going to happen if this trade works. If this trade works, it will cause that cascade, and then I will add on that weekly break. So that's potential. Well, that's a trade I have on now with the potential to add more if it starts to goes in my direction. Okay, but again, a lot of things going against it. Quarterly up here as well. Monthly right there, it has a lot of headways, a lot of resistance, but that for me, I thought for a small play, I haven't traded cryptos in a while because it's kind of been trading very, very tight and inside a channel. It's an interesting shot. Okay, so let's just begin to wrap things up by just talking about a few names here and showing some of the technical damage that's been done over the course of the past month. So first and foremost, let's talk about Apple. We talked about that chart and I shared it a while back. I said Apple looked very, very bullish in the short term, and it did its job, right? So this is what I said. Apple, here's the pattern I talked about in July. We cleared that July high. You're going to take out that high that June high. You'll take out that high in May. We did that. So it did its job if it managed to do it. So here, it broke down, looked terrible after the Apple earnings, right? It came down, but once it broke above that level there, right, it came back up and took out that pivot high. So I'll just draw that pivot high in here so you can see that. Okay, so where's that pivot high there? The pivot high is 215.31. I did take it out. 215.31. Where are we talking about here? 215.31. Yeah. So it took out the pivot right there. Going into earnings. It took it out there. Okay, took it out, and it came back in, and it went past 215.31 even. It got even higher than that at the beginning of August. It came back in, and then since then it's come back. It's kind of got choppy here. I just want to take a look at one quick thing here. I'm going to turn on the aftermarket data. because I do want to just quickly see something. Yeah, okay, so that's in there now. Okay, so you can see here now, Apple went inside bar reversal to the upside, and got as high as the monthly open. So that here ended up being resistance. Thursday, outside bar. Looks, fairly decent. However, it's a doji, and then finally outside bar and down, and it took it all the way back down underneath the quarterly open. So now Apple looking a little bit on the bear side. Watch out for that. Okay, so Apple there now hit a level, could not crack above it, and now looking looking materially weaker on the quarterly chart. Doji bar. Okay. Let's take a look at a few names in quick fashion now. Adobe, here are some stock charts that are looking relatively weak. Outside bar and up. Here now, it broke below the prior month and coming back in through the range. So we're going to look at a few charts that look just like this, and some of them have already completed that pattern, but there's the potential now for Adobe to take out June's lows. There's Adobe. FAS, financials, leveraged. Okay, same thing. Outside bar and up. We know we talked about this one. For a while, it looked like it was going to, financials were looking stronger and stronger, but the Fed's now, on this, looks like they're on the side of cutting, more than not. So the financials have not been reacting well to that environment. It was outside bar and up, coming back into the range, potentially coming out through the other side. Watch out, inside bar now this past week, and outside bar and down, Momo down situation on the weekly chart. So watch out, financials. Looks really possible now they take out June's lows. Yandex. Another exact same pattern. Look, outside and up, coming back in through the range again. Exact same thing. Look on the weekly. Outside inside pattern that resolved to the downside. Look, outside inside once again on the weekly. Which way is it going to resolve? To the downside? If it does, that's looking very, very likely to get taken out the lows of June as a very strong candidate, as a pivot to go after. Microsoft had been holding in very, very strong until the past couple of weeks. Then things really began to get weaker. So kind of very choppy stuff here. Let's go back to the one-day chart. That makes a difference or not. But here you go, outside and up, broke the momentum there, coming back through the range again. Inside week, went up, failed the breakout, right? So now if it breaks below this prior week's low, there's your inside bar reversal on the weekly chart. Okay, that thing breaks on the weekly chart. Again, the pivot low, June's lows, right? Outside bar and down on the 2-day chart, Momo down. Oracle, so they see some of these tech names are getting weaker. And it's very, seasonal wise, it's very common, right? So some of these big enterprise names tend not to be strong until Q1 or going into the Christmas, the Santa Claus rally, as they get in some of that end of year budget that pads their Q1 books. So right now though, Oracle looking very, very weak for the past, look at that, 1, 2, 3, 4 weeks now. Outside bar on the weekly, look at outside inside, taking out June's lows. Looks very, very likely there. Okay, American Express, even financials, like I said with FAS, but the credit card companies have been doing really, really great for a while. American Express, look at that, it had come to hit those all-time highs, but now pulling back in. Not the end of the world kind of stuff, but certainly June's lows are in play. Outside bar up, coming back to the range. It went inside bar and down this past week. Now, if you want to look at something that played out, look at PayPal, right? It's not the exact same space, but definitely a financial company and tech company playing within that space. And look, there's your outside bar up situation. It took out that pivot low there, so let's draw it in. Took out that pivot low right there, and then it came after June's lows. It took out June's lows. It's bounced up a bit now, but that's what a completed pattern looks like. So PayPal, again, trading full time from line to the downside, as a bunch of those names I just shared already. Let's look at a few names that that did finish that pattern. Look at the tech stocks getting smashed, as I said already. Enterprise Tech, Workday, outside and up. Broke that pattern low, came back and come through these pivots here. Workday got weak. Zen, same thing. Another enterprise tech space. There, outside and up, came back down and ripping back through. It's come back up now, but it did its thing already. Took out June's lows. Now take a look at just maybe 3 more names. We'll close things down. VMware. So here's the funny chart. So on Friday, VMware came out announcing they were going to buy 2 cloud companies. They bought C-Block, so Carbon Black, and the other one was Pivotal, right? So Pivotal, look at the pattern on the quarterly, outside and up, took out that level there way back. When did that level get taken out? So that level there got taken out here way back in the beginning of August. And now guess where it's going? We didn't know that they're going to buy cloud company until this past week, until Friday, when it gapped down 10%. And now that pivot low looks very, very likely that it's going to get taken out. right? So we didn't know that by just looking at that chart, that what the catalyst was going to be that would allow it to take out that pivot low. But now that we know, it came, the actual news didn't come out until yesterday, the 22nd of August. So between this thing breaking, which was the second, we had 20 days before the actual news came out why this move was sustained lower, and now looks really likely that we get the 129.33 pivot taken out, especially since it was going outside bar and down on the weekly. CAR, if we can pull that one up, that's Avis. Outside bar up, coming back through the range. Look at that momentum move to the downside on the weekly. Outside bar down, 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 right? That's looking rough. They're going after that pivot low there. This pivot low here, I was put in Q1. So that pivot low here. Yeah, right there. And last name, a little more of a bullish name, one that I shared in the past, is Restoration Hardware, RH. So this past Friday looked kind of bad, but every single stock looked bad on Friday, pretty much. But here to the upside, outside bar down, comes back up again, and we're aiming for that pivot high up there. And so I pointed out this name way back a few weeks ago. So it's been grinding higher ever since then, right? So grinding higher, and that pivot high was in play. Earnings here in September. So maybe earnings is what takes it to take up that pivot high there. Just keep your eye on a Restoration Hardware right now. The only issue is that you have kind of a shooting star here on the prior week. So if it does take up that low, expect to pull back in again, and it could get choppy before it tries to make a move back to the upside again. But Restoration Hardware right now looking like a strong name in a kind of weak market. So that being said, I want to wrap things up here now. Thanks once again for tuning into this week's weekly market video. As always, if you know of any traders who could be served by some of these videos, please feel free to share this video with them. Also, be sure to give us a big thumbs up so that we can attract more viewers. And lastly, if you have any questions or any comments, feel free to drop them here on our YouTube page or on the blog site. I wish you a great trading week and happy trading.